Good morning, everyone. Okay, so this week is non-farm payroll. So I'll probably just come out and just say this. Normally on non-farm payroll, I usually stop trading Wednesday morning, but since I already had this live stream schedule, might as well go on with the already scheduled programming. But normally by Wednesday morning, definitively by Wednesday afternoon, I stop trading because non-farm payroll is on Friday at 8:30 a.m. Let's take a look at the economic calendar. Hey, the economic calendar is your friend, okay? Let's see if we can refresh this. See what it looks like. Okay, so non-farm payroll unemployment is at 8:30, and tomorrow we have the jobless claim. So with that being said, I'm thinking between Wednesday afternoon and all the way until Friday morning, you will have quite a bit of neutered price action, meaning it will be very constricted. The move will not go anywhere. You may see the opposite, but I highly doubt it. What you usually see in the afternoon, it'll be very choppy. It'll go back and forth. You will not get a price action like we get this morning, right? So it'll be very choppy, a lot of wicks you'll see on the graphs. The graph on the chart. So I would usually stay out of the market on Thursday, and I'll probably jump back in like around 8:45 on Friday morning, and anything afterward. That's when a lot of liquidity will be pulled into the market. Will be dumped into the market, and then price will move around quite a bit. Whether price go up or down, but it will be a lot easier to navigate at 8:45 on Friday. But since we're here, let's take a look at some of the chart to see where we are, where we come from, and what price is trying to do. All right, so the first thing I try to do is figure out, okay, what happened this morning on the 60 minutes. So if you take a look at the midnight open, let's see. So we're way past the midnight open. The 6 a.m. and the 7 a.m. are down below. Okay, so we'll just clear out this high right here, almost. So short by a couple ticks, maybe by a tick or two. Yep. So looking at this, it's kind of hard to make a prognostication of what price is trying to do, right? Let me see if I can remove some of these. Over there. I need to see clearly what's going on there. So we do have a 1 hour gap here. We can try to see if price can capitalize on it and try to get there. That's what they did yesterday. And it looks like that's what they also did this morning. Yeah. So is it a possible scenario that okay, price touch it again and then it will go back lower again? Possibly. Let's see, I'm making sure that I encapsulated correctly. There we are. Got that. And then, so now the next thing I'm going to do, since it is about 10:40, and I know between 10:45 and 11:15, we may get some price actions. So let's see what we can ensue here. So what I'll do is mark the lines for 10:45. Okay. And 11:15. It seems like we may have had a early start. So looking at this, and then the next thing I do is take a look at the 10 a.m. low and the 10 a.m. high. So see, there's a method to the madness, right? I mean, that doesn't mean you're going to win. You're just trying to see how you can frame your trade, right? What did I do here? Trying to frame the trade, try to figure out, okay, what is the best possible scenario here? What's that line? Okay, so mean threshold is here. Okay, so I selected the wrong indicator here, so let me try to get that. So the next thing I can try to do, okay, I'm like between that time, between 10:45 and 11:15, what will price do in order to make a significant move, getting close to London close, right? All right, so it's already reached deep into a premium. Doesn't mean it cannot go any higher, but we're trying to figure out, is it trying to pull back lower then go higher? Or is it trying to pierce higher one more time to go lower? So that's the action we are looking for right now. Let's make this one bolder so we can actually see it. So to me, so far, I don't see any indication that it's going to go lower. Reason why is because we have this relative equal low. It has not break that it has not break that low in order to make a break in market structure. So at this point, I'm just sitting on my hands here. So once it breaks lower from this, and then a slight pullback, then I'll be able to go short if it needs to go lower. If price action allow me to do that, of course. Again, when it comes to trading, there's a lot of sitting and waiting and weighing out some options. So it's not just you come in and then you see price and then you just engage it. You gotta find a logical way, a logical pattern. You try to figure out, okay, if this, then that. If this price action takes place, then I will engage price like this. So again, what I'm trying to emphasize here is there's this 1 hour gap here. Yesterday it touched it right at around, yeah, we can say right at around 355, closer to New York close. And now it touched it again this morning, right at around 10:38. Usually, not all the time. Like after 10:30, that's usually when you get a natural reversal, meaning this is market open up, it went straight up, then went down, and then went straight up again. So to me, I'm thinking like after 10:30, this is when the typical reversal. You need to anticipate a typical reversal. Yeah, on until that price trade below this, I will definitely stay out of it. Now, the other scenario is it may end up breaking lower and never give me a chance to short it. Um, so it's one of those things. You may miss it, and if you try to chase it, you may end up hurting yourself. Yeah. So this is one of those things like just trying to figure out what is it trying to do, what is it framing. I can see a little bit of support here, right at that candle. It looks like it's resisting to go lower. And again, you never know. I think it may just try to push it up into that gap and then help it plunge lower. I mean, if we look at, let's just take a look at the 60 minutes here. I know my chart is busy, but man, when you're trying to anticipate this market, it this is all the work that you have to do. So we made an all-time high, like around September, I say September 21st or 23rd. We made the all-time high here, and it's been going lower, lower, made a huge stride to go higher, failed to make a new high. Yesterday, it tried to go high again, failed to make a new high, came short, and now it looks like there's a possibility it may come short again. So I don't know what the catalyst will be that would make it, punch higher and keep going higher and higher. But if you were to go higher, obviously, I'm looking at these highs here. I'm thinking they'll probably try to save that for Friday, but sometimes you never know. It may go all the way up. See, let me see if I can make it a little bit wider. You can see. So price may get animated, go really high, and then punch higher, and then stay consolidated for the rest of today and tomorrow. And then when you have the 830 unemployment data, and then it punch a lot higher, and then after that, they start retracing a little bit lower. So there's a lot of possible scenarios here, until you see a couple move first, and then that's when you can make the next move. It's like programming. If this, then that. If that, then make this decision. So now at this point, it's 10:50. Not surprised here. What's going on there? That I was expecting that, which is why I'm literally like staying on the side, not making any trade at all. typically when you see price is stubborn like this, meaning yesterday it punched through, create all this damage below, went so low, and trying to get back up, and then hit punch it here, and then you see all this consolidation or this weird consolidation. Excuse me. Make this weird consolidation. It's usually telling you that they refuse to go lower. It's time for it to go punch a little bit higher. It's like knocking on the ceiling. It's like if you scroll back, knock once, knock twice, and then the third or fourth time, and then it just punch higher and keep going. To me, until it breaks below this low, I'm not going short. I will make the assumption to go higher. Like if you were to tell me, okay, if I need to get in, which way to get in, I would say it will probably go higher because there's no evidence for me that say that it will go lower at this point. It can, but there's no evidence yet. It's showing me now it's more willing to go higher. Now, looking at this, how confident are you, right, that you can take a trade and it's gonna pan out well for you? I'm not confident at all. Whatever move is going to happen next, I don't care if I missed it because there's a high probability I will get it wrong. I mean, look at this. You have this gap here. You have all these candles in the middle. Yeah, come on, man. Don't do this to yourself. Even though I'm leaning more 51% out of 49 that it will go higher, I'm still not going to take that chance. And I know it's two micros. What can I lose, right? It's just two micros. Now you gotta stay focused and follow the rules and the guidelines that you choose to do. If I didn't have this live stream scheduled today, what I would do is probably just close the chart and go do something else. I wouldn't even look at it right now. It will be a waste of my time. Inside that gap, there are way too many candles. So this is what I mean, too many candles. I'll show you. See this? Look, there's a gap here. Whichever gap you want to choose, pick one. Right? Just pick any gap. What is this one or this one? All right, let's pick the lowest one. See what happened here? When you have these gaps and price jump into it real quick with one wick, you see the reactions? Look, look, look. Very nice. It's quick, sudden, and then it gets to your target. Compared to this, Look at it. It's undecisive, doesn't know where to go. And I'm gonna be honest with you. This may go for another hour. So what you may end up seeing, it may just pop up and then come down and then consolidate. Pop up, come down, consolidate, pop down, and then got up a little bit and then consolidate. And this may go on for an hour to all the way until 1:30, and then you'll get real animated and then go quiet again, and then he'll keep doing that until 8:30 on Friday. Let's just say you wanted to go long. I mean, how far did you get? Not far at all. Let's just say we got in at 885, and now we went up by 15 points. That if that's your goal, then that's fine. But how long did it take to get there? So the first time it reached 885, 884, this it took 1, 2, 3, 4, 5, 6, 7. It took like 20 minutes to get you to 15 points. Compared to here, talking about from 951 all the way to 1015. Let's just say so worth it around 20 minutes also, 20, 30 minutes. It covered the ground from 729, 835. That's 100 points in the same amount of time. See? What would you like? 15 points in 20 minutes or 100 points in 20 minutes? Your pick. I mean, it's a lot more volatile here, but it gets to the objective. Yeah, and whatever move is gonna come next, don't feel bad. Don't feel like, oh, you missed it or you should have known. No, you wouldn't know. Even though I know for sure, I make the assumption that it will go up, and I did mention that earlier in the live stream. I don't feel like I missed out because it could actually try to act like it's going up and then plunge lower. And when it goes low, it goes really quickly. In like 1 second, bam, knock you out. That's the knocking to the ceiling effect right here. Come down, refuse to go lower, and punch back in it again. I just make it a rule for myself. The moment I see those, I can't take it. I just walk away. I know it's about to be some shenanigans, a lot of pullback. Yeah, the moment I see those wicks, I can't take it. So we're just going to sit tight. I'll probably give it about another 30 minutes or so, and then if I don't see any meaningful action, I'll just close shop. Yes. Obviously my mic was muted. I apologize for that. So yeah, so this is one of those days, one of those best days when not to trade, right? So what I was highlighting earlier and my mic was muted is once I see this kind of structure and this type of structure, it's gonna give me a signal that it may be going lower. I mean, let's build the case. It's been trading higher and higher since 9:52. It's after 10:30. This is normally the time when you start seeing some reversals. If you've been on the chart for a long time, okay, you may think, okay, 10:30 is time to reverse. Maybe you see it starting to go lower here, and then you say, all right, let me go short. The market pop you out, and then it acts like it's going lower again. And if you're involved and go lower here or at any point here, it popped you out again. So you got popped out one, two times. At this point, you're tired. You're like, okay, maybe it's not good for me to participate in the market. And then, okay, you decide to opt out. When I see these two structures, there's a very good signal for me that it will be going lower. But we'll wait and see what it does. Yeah, so it's one of those things. It's best you don't get involved, and then you sit tight, you wait. Um, if it goes without you, then oh well. I mean, my thing is, even though he has not break into that low for the market structure, but I'm already seeing the build up for it to go lower. I could be wrong still. And I think at this point, once it build that structure, once you go below this, there's no coming back. It's just gonna keep going lower. I mean, just watch. Yeah, once it breaks below this, especially below this one, all these bodies here, the entire body, once it breaks below, there's going to be a very short retracement, and then bam, it's going to keep going lower. And I'm targeting maybe these lows down below the 10 a.m. low. Again, folks, it's all probabilities. There are no guarantees. Nobody's really know for sure where it's going. All you can do is build a logic and try to see what the price action is giving you, and then have the gumption to wait. Usually, that's what I usually do. Um, I'll just put a level here like this, and then just go about my business. If it goes into it, pop it higher and break it, oh well. But now at this point, I think I have everything in my favor that it will be going lower. You can see the resistance being built right here, right? Let me show you what I'm talking about. That's the resistance I'm talking about. See this? It refused to go lower. Yeah, like to me, this is nerve wracking. Yeah, so in my experience, the reason why I know this stuff is because I get hurt so many times. Um, like when you start discovering one pattern, and then there's always another pattern that throw a curveball. This is what I'm talking about. Like for example, if you start looking at your chart, you see like right around 10:15, 10:30, 10:45, you start seeing the market retracing or reversing. So what you start doing is you put yourself in position for the market to reverse and capitalize on it. But every now and then the market will throw a curveball at you. This one and then this one. Right? So which is once you go through that process so many times, you get knocked out so many times based on your experience. When you see it, you get wiser with making better decisions next time. You know there's no way this thing's gonna go without you. It's always gonna pull back and do a lot of back and forth. So you don't rush and get into it. You sit down and you sit up and wait. I'd rather keep all my money from yesterday rather than lose any part of it because I'm trying to rush into a trade and to make a mistake. And the reason why I put my order here is because this is the gap before this high was broken. Any gap before a high or a low is broken is significant. Always. You need to pay good attention to it. As you can see, this gap, okay, all those gaps, the gaps before the high is broken. So there's a high here. Let me highlight that one. This is that high. And there's a gap here. And then there's a gap right there. All those gaps are all the gaps around that high is significant. That gap is significant, that gap is significant, and that gap is significant. Which one is more important than the other? It's this one. This gap is more important than all of them. Let me put a gold standard around it. Now, will you always get into that trade? Will you always go back into it? Probably not. But to me, this is the most important one. This is the one I always try to eye for. Once I get into that gap, it usually play out in my favors. The absolute best gap to get in, if you get a chance, is this one, the one after. Imagine if you're able to go short from here. Wouldn't that be nice? 915, and then you get it down to 878. Not a bad trade. Not a bad trade at all. But it's the scariest part. It's the scariest one. I'm thinking at this point it will probably rotate lower now. I don't think it's gonna go any higher than this candle here. So let's extend that out and see. Yeah, close 1051. Extend it out. Sometimes you're gonna have to improvise on your plan, right? It's more like you update your plan. You're like, okay, so you missed the mark here. Where is the next best area you can get in? It will be that area right here. So 59 dash. Yep. So to me, if there was an area for me to short, it will probably be here. I'm not going to do it because I don't know what's going on here. It is a little bit of a funny price action. I'm waiting for this one. All right, let's give you guys some action, okay? I know that's what you guys are waiting for. All right, and then the other thing you need to do, since it break slightly lower this one, you put your fib here to there, and as you can see, it's still on the discount part. So I'll put it right here, like a low threshold for it to get in and get out. So put it here. Yes, I'll get the best trade. Like if you were to extend out, yeah, it will be a lot of retracement. But if it gets really animated on the downside, I'll be able to get in at the very low level on the premium side, which is aligned to this gap right here before this high was taken. And also with this one, this is you see all these green candles. This is the highest accumulation of green candles going up. So being able to participate in that, so that gap is also very significant for me to get in. So we'll wait and see how it reacts. So again, there was multiple point of entry. There's an opportunity to go short here in this area here, another opportunity to go short here, another opportunity to go short here, and then there's an opportunity to go short here. But I wouldn't chance it back there because it was still on the discount level. To me, that candle here or this candle is another area for mitigation, meaning if it gets any higher than this area here, it'll probably pump up higher. Right here. Anything higher than this line, yeah, it's going up. And so that's the thing here with this price action. It's showing you both sides, right? That everything can go either way. And this is not the ideal environment for trading. This key signature here, and this line right here, is showing me that it's bullish. And it's going back up to knock out the ceiling again. So it did it once, 3 times. That's the third time. And now it's knocking again one more time here. Not good. Right? And there's this obvious, all the bodies respecting this low here. Yeah. So this is, I can feel like I'm offside already. So when you enter a bad trade, what do you do? This is one of the $1 million question. If you feel like you're into a bad trade, obviously the best thing to do is to close it right away. Usually what I try to do is I move this buy signal here very close so I can just break even with what you usually see where you enter. It's just gonna tap right into where you enter and then go against you again. So why do I feel like it's going against me? Again, a lot of resistance, right? To go lower. Pretty much is saying I've done all these damages below. Yes, I made a new high here compared to yesterday, but I want to create more damage upward. So this is the signature that I'm seeing. Could it be falling lower and go much lower than this? Possibly. I'm not betting on it. It is. It's too stubborn. Very stubborn. Yeah, to me, this is the last line of defense. So once it gets above this and price close above this, it's a wrap. And it's gonna do it rather quickly. So watch it reach it very quickly and then stop me out. In that case, should you reverse? No, because it's gonna come back down again. You see, I told you I was gonna go. It's going to do it very quickly. And Bill knock me out any seconds now. Whatever the next scandal is gonna happen is gonna do it very violently. It's gonna knock my stop out very violently, or it's gonna drop much lower very violently. Okay, here we go. Here comes nothing. Yep. See, violently hit it very quickly. It's okay. You have to be. You have to get comfortable with um, losing trades, right? We already knew that things were kind of messy and complicated here. I knew the moment that price did not drop below here, I already knew I was in a compromise situation. I never had the chance to mitigate it. But what does that tell you? That tells you Again, not to participate in those trades. It also tells you that you were correct, that this on assumption that market is going to go higher. It also teaches you that it knocked at the ceilings at the ceiling multiple times. So one, two, very shallow retracement, and then three hit it the third time. That's what that teaches you. So what is the next target? You can try to go long and then try for the next target. Nothing. Now at this point, it is confirmed. It's not gonna go any time down until it reaches the level. Let me check here. You got 942. Let me put you into 1 hour and show you what I'm talking about. 942 is the next level it's going to reach for. Okay. And above that, I more than likely try to make a new high. So you got, see, you got 942 and potentially this area again. It's going to try to get into that. Okay. So that's that. Is it going to make it in one straight shot? Nope. I'll probably retrace a lot lower than you can taste for. It's probably gonna retrace a lot lower than you would like to, and then to go much higher. So now you're gonna have to reframe and recalibrate how you do your trade now. So you can just keep going higher, keep pumping higher from now on. The reason why it will keep pumping higher and do very little retracement is because you spend all this time here. Uh, where's that tool? Fibonacci circle. Is that it? Yeah, let's try that. So when did it enter consolidation? It entered consolidation here, and consolidation. It went out of consolidation right about here. All right. All right. So it entered consolidation here. Let's see. Yep. So from here to here, if you look at the circle, it reached that level. Bam. Yeah. So that's why I run on a straight shot. While the next level we can reach for, yeah, I hate this tool has been used here. In Call Schwab, it's a lot easier. You can see this one is dynamic. I don't like that. Let's see. Oh, still moves. Any rate. So yeah, it's going to keep punching higher. So whatever length, so what I'm trying to say is whatever this length amount is moving here is gonna move upward again in that same direction. I was just trying to use the semicircle. It's a little bit easier to use. But let's see. Let's see what we can use to make it a little bit easier. The consolidation here. And it stopped right about here. If you take that, and then you rotate it up. If there's a way you can rotate that baby up. Hey man, I'm trying. So this one still okay. Man. Okay, it's right around there. Let's just right around here. So what would that bring you? Baby, that's too high. That's too high. Okay. But you know what I'm trying to. So um whatever the amount of the time, the amount of length, if you like take a bar and then you rotate it up, if there's a way you can rotate it up, this is how much it's gonna go up by. That doesn't mean it's gonna happen right away. It may take a few days, it may take a few hours, but this is probably the amount of time that is going to go. The time when it's going to do that, we can anticipate that. Let's see. I mean, I think at this point it's irrelevant on when that will happen because it had already happened. So, yeah. So you got this high, and then this is the lowest low, or this is the area where there's a change in character or the change in order. So as you can see, it will reach that level. If it's really animated, it's gonna reach that 1125. It's very nicely animated. It's gonna reach around 1140, which it did. It did it before then. If it's going to be lackluster, it's now it's moving up and down. It's gonna be 1154. You already reached it before that. Then it's if it's really bad, that means it's gonna go sideways like this. Then it will probably get there like around 1218. But it got there way before that. So this is kind of like how usually I would time frame when something will happen, especially after it goes into consolidation. And literally what you have to do is the recent high and then the point of reversal, and then you can kind of time out where would that happen. That will tell you how long you need to sit out and wait. And this works for any time frame. Obviously, you're gonna if it's a higher time frame, you're gonna sit there for a lot longer, right? Okay. I don't know what's gonna transpire from here. I think it will keep going up. The way it's doing it, I think it's just gonna keep grinding higher, and then after that, it's just gonna keep pop up again. I don't want to be there when that happens, so I'll probably just close up shop right now. This live stream is more like when not to trade. When you see the markets offering you both sides, it's probably not a good idea to trade. As you can see, when I frame this and when I frame that one, it says, okay, there's a high probability it's going to go lower. But since it never break that market structure, it never happened, right? So there you have it. If you had any doubt about the potential of breaking market structure, you can see it worked. So if I wasn't pressed to give you guys any action, what happened is the lesson from this is if you never break the market structure here, do not trade it. Do not even get involved. That line provides support. That line provides a break in market structure. That's it. Maybe I should put it lower here and add some annotation. And when you're doing your journals, you want to make sure that you take notes of all of this, right? This is kind of like all the things you need to pay attention for. And then you see how often it happens. You take notes. Does it happen 10 times out of 10, 7 times out of 10? And then you make a good note of that and you document it for the future. Because something like this will happen over and over again in the future. So if you know how to best deal with it, it's better, right? So in the future, you probably will be seeing a similar market structure. And you may think, okay, since it happened last time, we provided support here, I'm going to go ahead and go long, and you may be wrong, right? So you will have to know why it's going back up. And the reason why it's going back up is because all this. It's been doing this for the past 2 days, and he has not reached a new high yet. So because he has not reached a new high yet, and all this damage at the bottom, it's gonna keep going up until it reach that level above here. And what's the other level? Yeah, until they get above this or very nearby. So let's put 60 minutes. Yeah, let's take this one out. Yeah, so to me at this point, 942 is in play, and I feel like those highs are in play. Man, if it punched through these relative equal highs here, uh, two things can happen. It's either it's gonna go in consolidation for for the rest of the night, or it's gonna keep punching higher and higher and higher, and then Friday comes, you either gonna get it's gonna pump higher then go lower. But yeah, it's gonna be very interesting how Friday turns out. With that being said, that's all that I have for today. Know when to trade, know when not to trade. Thank you, everyone. Hit the like buttons. Please subscribe. There will be more of this coming up into the future. When to trade and when not to hurt yourself. Thank you, everyone.